Is now a good time for first-time buyers to enter the market? I believe it is, and I'll explain why this is the case. So if we take a look at the average prices across New Zealand for the past decade or so, we'll see that there was a big boom in 2021. So property prices rose in 2021 across New Zealand by 24%. If you look at the average price now, it is very similar to what it was back at the end of 2020. But the lending environment in 2020 was very different to what it is now. And what's the reason for that? Well, there's two main factors. The first one is the OCR, which is the wholesale interest rate determined by the Reserve Bank. Now, back in 2020, the OCR was 0.25%. At the time of recording this video, it's 5.25%. So the OCR has increased by 5% since 2020. The other factor is inflation. Now, back in 2020, inflation was low as 1.4%. At the time of recording this video, it's at 7%. So a higher cost of living, along with higher interest rates, has meant that getting your mortgage approval for first home is a lot harder than it was back in 2020, even though the average prices are very similar. And this is where the opportunity lies. Because mortgages are harder to get today, if it's something that you can afford, you will have far less competition than you would have in 2020. Because the less people buying means you're in a position where you can negotiate better terms. And also, you might be able to get a lower price than what you thought you'd get. This will not happen when everyone comes back into the market. Even though I said the average house price now is very similar to what it was in 2020, I believe you can even pick up better deals than they were in 2020, especially in Auckland. There are new build townhouses in certain areas that are going at really good prices at the moment. The other thing to take note is that banks actually don't like the current environment because they need to be able to lend money to make money, because they make money from the interest you pay. That's why at the moment you're seeing really good cash contributions, and also you're seeing these under the table interest rates, the famous one being that 4.99% that happened about 2 months ago. Even though the interest rates are high at the moment, banks are doing short-term under the table deals as well, very similar to that 4.99 ones. It's actually good if you can get in touch with your broker because they don't last for very long when they come. But this does show that banks are willing to do things to get new business, even though things are tougher. The other factor to take into consideration is next year the government's thinking of rolling out debt to income ratios. So for example, let's say the ratio is 6. If you're earning $100,000, it means the maximum you can borrow is $600,000 according to the debt to income ratio of 6. I'm not saying it's 6, it could be 7, it could be 5, it could be 8. This shouldn't impact first-time buyers too much, but it's still something to take into consideration because that could make lending a little bit harder. With these factors that I've presented, I believe that now is a good time for first-time buyers to enter the market. So for more content like this, you can follow us on our social media platforms like Instagram, Facebook, LinkedIn, and you can also go to our website www.vibe.co.nz, and if you want to have a chat about your first-time buying options, feel free to drop us a line.